Hey everyone, I hope you're enjoying your summer vacation, and in this video I wanted to give you a market update. I'm sure you guys, if you are following along on my channel, have already heard the news, but the Bank of Canada raised the overnight lending rate by 1 full percent on July 13th. Now, we were expecting a rate increase, but we were expecting closer to the 0.5, 0.75% range, not a full percent. In fact, we haven't seen a full 1% increase in the overnight lending rate since 1998. I'm Caileigh Anderson and I sell real estate in the Langley and the Fraser Valley area, and I put together a video for you that's going to go over the latest market news on a larger scale, and then I'll dive into the Fraser Valley and Langley stats on a smaller local level. It does take me a while to put these videos together, so if you do enjoy them, I would so appreciate if you did hit that like and subscribe button. I'd also like to take this time and invite you guys to click the Calendly link in the description below, where you can book a seller's consultation, buyer's consultation, or just simply ask me questions about real estate. Now let's dive in. Unless you've been living under a rock, you've probably already heard that the Bank of Canada increased their overnight lending rate up from 1.5% to 2.5%. The governor of the Bank of Canada has said that he would like to see this overnight rate hit 3% before the end of the year. The next time the Bank of Canada meets will be in September. Whether or not it goes up in September again, we don't know. However, we are preparing for another rate increase of 0.5% before the end of the year's out. I wanted to stop and take some time to go over who this 1% rate increase affects, because it can be very scary to hear about a 100 basis point increase happening overnight, especially if you've purchased in the last 2 years at an interest rate that is lower than what we are at today. If you've been pre-approved already at a fixed interest rate, you won't be affected. Now, double check with your mortgage broker, because a lot of these interest rate holds have a shelf life to them, and that's usually 90 days. You have to actually complete on a home before that 90-day term, or you're going to have to be pre-approved. You have actually had to remove subjects, have your deposit in, and are now completing on that property for that rate hold to be honored. If you're currently in a fixed rate right now, you're not affected, so you can go and get some sleep. Now, I'm not a mortgage broker whatsoever, so please consult your mortgage broker before taking any action. Variable rate holders, this is when you want to listen up, because there's different types of variable mortgages. A static variable rate, your monthly payments may not necessarily change, but the amount allocated to either interest or principal will change. Again, not a mortgage broker, but that's the way that I understand it. The other variable rate is an adjusted variable rate. Now, this one is what floats with the prime rate. So you're going to want to call your mortgage broker and find out how much your monthly payments will be going up. Rule of thumb, for every $100,000 borrowed, this amounts to an extra $52 a month on your mortgage payment. So if you have a $500,000 mortgage, you can expect your monthly payments to go up by approximately $500. To have a 1% change happen within 1 day is very big. Now, I think what happened was the Bank of Canada waited too long to take action, and now we're seeing big rate hikes happen in a short period of time. And in the short term, this is going to hurt, but in the long term, it was needed. To provide some context on what the Bank of Canada trends have been for the overnight lending rate, I'm going to share my screen with you. So I've got the Canadian interest rate summary right here for the past 30 plus years. So you can see this was the crash in the late 80s, early 90s. Fast forward to today, we can see the overnight lending rate sitting at 2.5%. And during COVID, we can see that the Bank of Canada lending rate was very low. It's very clear that the Bank of Canada's intentions with raising the overnight lending rate so rapidly is to curb inflation. However, the question of it helping housing affordability is an interesting one, because yeah, it's going to slow things down for sure. We've already seen that, but will it help overall housing affordability? Because we still don't have enough supply, and immigration is still very high for the province of BC. It will be interesting to see how this rate increase will affect overall housing affordability when we look back on this in a few years' time. Okay, now that we've talked about interest rates and real estate on a larger scale, let's dive in and talk to you about your market update for the month of June for both the Fraser Valley and Langley area. For the month of June, the number of sales for all asset classes in the Fraser Valley are down 5.8 3.8%. We are down 43% from this time last June. To give you some idea of what that means, this was the slowest June in terms of number of sales that we've seen in the past 20 years. Okay, I've been an absolute angel for all my Langley and Fraser Valley people out there, and I've gone and calculated the months of inventory just to bring you up to date on what's happening in those specific areas for those specific asset classes, whether they be detached, townhomes, or condos. So I'll share my screen with you so we can get an idea of where we're at. And this again is for the month of June. That's the last full calendar month we have on record for the stats to be calculated on. Fraser Valley detached are sitting at 6.6 months of inventory now. That is officially in a buyer's market. We're seeing subjects on contract, even in some cases subject to sales. So things are definitely changing in the detached market. Townhomes in the valley are sitting at 3.58 months of inventory. So anything that's 0 to 3 is a seller's, 4 to 6 is a balance, and anything 6+ months is a buyer's. So when we are in the low 3s, such as the Fraser Valley townhomes right now at 3.58, so it is slightly skewed more towards a seller's market, but we are moving towards that balanced market category. Condos are sitting at 3.18 months of inventory, so they are still technically more skewed towards seller's market, but they're moving towards a balanced market at the 4-month range. Diving into Langley, detached homes are at 6.12 months of inventory, so again, these are officially now in a buyer's market. Townhomes, they're sitting at 2.84 months of inventory. They're still surprisingly in a seller's market. I was pretty surprised by that because, especially looking into Willoughby Heights, which is a sub-neighborhood of Langley, they have a ton of townhomes on the market right now. So I was surprised to see that that is technically still in a seller's market. That's again as of the end of June, so perhaps that's changed now as we're into mid-July. Condos are sitting at 3.17 months of inventory. You can see all across the board prices have come down in all asset classes, and that goes for both Langley and the Fraser Valley. I do expect months of inventory to continue rising over the foreseeable future and moving further away from the seller's market that we've been in for oh so long. Yes, sales are down overall, but at the end of the day, people are always needing to buy and sell. And there's a really good opportunity right now for upsizers. What do I mean by that? Well, the detached market has been hit the hardest, then the townhome market follows suit, and finally condos take in the least amount of heat just because of the price point they're sitting at, because the percentage that it's dropped since the peak of the market in March is not nearly as much as it has for townhomes or detached. But if you're in a condo and you're looking to upsize into a townhome for some more space, you're going to sell in the same type of market as you're most likely going to be buying in, assuming you're staying within the same area. So the percent that you're buying in has dropped more than the percentage that you're selling in. Now again, you have to think about what are you purchasing this for. If you're going to be there for the foreseeable future, the next 3+ years, you will most likely, looking at historical trends, be fine. If you're again looking to purchase an investment property, maybe flip it quickly, I would suggest maybe don't at this particular time. I hope you guys enjoyed this video. There's a lot of moving parts happening right now in the real estate market. So again, I encourage you, if you do have any questions, you can book an appointment with me below using the Calendly link. You can have a buyer's consultation, seller's consultation, or simply chat about real estate with me. Reminder also to hit that subscribe button. It does take me some time to put this data together for you, so I would really appreciate if you took the time to do that. Thanks again for watching, and I will talk to you soon.